Welcome to another video. My name is Robin, and as per usual, I am joined by Kirill. And today we're gonna do a different style video. So we decided to decommission the spreadsheet as we are getting closer to the launch of our web app. So the reason being is that the spreadsheet is quite labor intensive when it comes to maintenance, and we decided to put our efforts fully towards the web app so that we can push it out earlier to you guys. You can still pre-order the web app today. However, you won't be receiving the spreadsheet anymore. So with that said, that also means that our content will be changing slightly over the coming months. But of course, we will be back with evaluations when once we have our beautiful spreadsheet ready to go. And in today's video, we would like to do something that we have been planning for quite a while actually, and that is just disclosing our own holdings. So the stocks that we have, why we have them, and the way we want to go forward with them. So Kirill, just kick it off.
So pretty much the whole idea behind this, as Robin said, that it's actually perfect timing for us just to focus on the web app. Finally, not to waste time on a tool which is pretty laggy, and this is something which is out of our control, unfortunately, right? But also explore some other, let's say, ideas we had in terms of content, and this is also one of the important ones, we think, because showing the transparency behind what we're talking about is probably even more important than actually what we're talking about. So that's why we're just gonna show some of our portfolios, some of our ideas in terms of what we're gonna be doing in the future, right? And just discuss some potential buys or sells, or like our decisions we're gonna be taking in terms of the trading activity. So this is my portfolio on the Hero, which is a brokerage account, and I got around 14k euros in it. And in terms of profit and loss, it's in green, luckily, but it's not a lot, so it's only, let's say, 1400 euros. Reason behind it is also mainly because I started literally from 500 bucks, right before whole COVID, and I was just gradually putting in the money into it. And here you can see the entire portfolio. So as we always discuss, pretty much all the companies that we are analyzing, especially in terms of big tech, they're very expensive. They are very just not there in terms of prices. So that's why my portfolio is also pretty defensive. So I got some oil and gas related stocks like Exxon, Chevron, Occidental, like Mr. Warren Buffett has. Some railroads, which is Canadian Pacific, the Canadian Railroad, Bank of America, a little bit of Amex, which both Robin and I actually like. AbbVie, which is medical related company, NN Group. So this is one of the, let's say, hidden gems we wanted to make a video about, but maybe that's going to be in the foreseeable future. And then, just some small positions in Porsche, in Philip Morris. There's a little bit of some smaller companies such as like Texas Roadhouse or Vici, which is a real estate investment trust, and some Visa, which I started gradually building up a position in again. I had some money in it already, and just gonna probably start investing in it, and just dollar cost average maybe when the price is gonna be a little bit lower. And then, of course, the two most important parts is, of course, the 20-year U.S. Treasuries. So that's a bet against the all-time high bull market that's going on right now, and of course the S&P short, which both Robin and I have. These are also positions that I'm probably going to increase in the foreseeable future, maybe in the upcoming couple of months. So that's why I got the rest of the liquidity in my portfolio just sitting in the bank, just earning me a monthly interest. So I'm just literally just patiently waiting. So, and then for that purpose, I think I got around another, let's say, 10 or 15k euros. So just pretty much just taking my time, just waiting, casually chilling, and just seeing where it goes, because at the moment, as you have probably seen in our previous video, the economy is just not supporting the situation what's happening in the stock market. So that's about it from my side, I guess. Do you have any questions, Robin, or maybe some remarks
Do
or
I have any
highlights?
questions?
Yeah, maybe.
No, man, no. I think I'm quite familiar with your portfolio at this point. So
Yeah, true.
let's we share different tools amongst each other, which also allows us to take some peeks into each other's portfolios. Which sometimes I'm looking into like what did Kirill buy and is it something worth investigating myself. So with that said, it might be interesting to start focusing on my portfolio.
Yes, let's get to it. Yeah.
So then for my portfolio, so the current stocks I'm holding are not as many as, for example, Kirill has. For me, it's more that I didn't really identify companies that I truly understood that were trading for a favorable price. So you can see some of the overlaps that I have with Kirill. So American Express is a company that I really love, and I try to put more value into that company. Let's say month by month. It's something that I've been looking forward to growing, and I think that if you've seen our videos about American Express, that you can also see why that is. We also did a video on Evercore Partner, and it's just also a really good company, and they have most of the things covered that you would need in an economy that is booming, and also an economy in recession. So that is the reason why I'm holding this, and it's also have been returning great value ever since I've purchased it. Purchased it, and then for NN, again, it's the hidden gem that Kirill talked about. It has really good dividend. In the grand scheme of things, it doesn't really matter that much, right? It's good to have the liquidity right away. Um, but either way, yeah, really good growth potential and just a strong company overall. And then I have a lot of ETFs that I've been nurturing over the past 4 years, I guess now. And this is something that I want to basically jump out of. Of course, dollar costing averaging out of these positions. So reasons being, of course, the economic turmoil and also considering just the balance of the ETFs and where the money is going to. So considering that even though you're buying, for example, like the Dutch ETF, let's say, there still might be some American influences, and the same goes for the Chinese ones. And I also think it's better to have control over what's happening. So I then, of course, know what's happening within the stocks that I own, but it's more difficult to see which stocks or in an index where things change from time to time. But also, yeah, an index has so many stocks in it, right? It's impossible to do really good due diligence on all of them, and it's really difficult to determine whether something is overvalued or not, based on the weighting and whatever. So that's my reason on why I will be dollar cost averaging out of my trackers and moving it towards companies that will become more fair valued. And as you've seen in our latest, I don't know how many videos, most of the stocks that we analyze are highly overvalued. So it will take some more patience. And then also that you cannot see right now on the screen, but I also hold, let's see, around 160 euros in the inverse S&P, the same ETF that Kirill, of course, is having as at the bet against the economy. So this is something that I'm also looking forward to start, uh, yeah, advancing a bit more on that regard. So that will be my two most important tasks for the coming, let's say, quarter, is just getting out of the regular ETFs, pushing it more towards fair valued, undervalued companies, and pushing it more towards the yeah, inverse S&P 500.
I also noticed a very interesting thing about your Chinese related investments.
Uh, you wanna put your hand on the sore spot right there, right, with
No,
Baba.
not really, because I also had the same story, right? I also invested in Baba, and I just closed the thing, and at heart I was just painful. So I was in the same trade as you were. So it's not,
Exactly.
no pun intended, but I mean it's just one of these highlights about our economic video, right? It is very important to also consider the macroeconomic environment and when it gets to these kind of
Exactly.
decisions, right? So
And for example, with Baba, it's more a matter of, for me, I don't need the liquidity right now. I still believe that Baba is quite a decent company. It had some bad decisions made, and there were some factors that were not fully in the control of Baba that affected the share price. But for now, it's just a matter of having it there, like I said, there's no need. There are no other really good opportunities for me to say, okay, I'll take this 600 euro loss and put it to somewhere else. There are not that many opportunities at this. So I rather have it in there and keep an eye on it on the site and sporadically checking the valuation, see if it's something good. If I want to start jumping back in and dollar cost average it down. But for this time, it's just for me just sitting there, just having some swings. So it was way worse than it is now. So it's recovering slightly. But like I said, there's no rush for me to sell this stock. And it will be there in my portfolio for quite some time, I believe.
And that's also the thing what I noticed, because I was also thinking about jumping on the Chinese market stocks, right? Because they're like hitting the 15-year lows, really, and like this is some very great deals you can get there, right? But then again,
Exactly.
the
Yeah.
question with like the liquidity running away from China, right? Because of Taiwan, because of like all of these trade ban warnings with US and all that stuff. It just makes you question, like, yeah, is it just too good to be true, kind of thing, or like the market is wrong at the end of the day. So
Yeah.
yeah.
It's difficult with Chinese stocks. I also invested in Luckin Coffee. That was also a bet that didn't. It was great value, but it then turned out after that they did some shady things with the balance sheet. And I also invested in China Telecom, and that one got delisted real quick.
Oh.
No, it was. Yeah, I haven't been lucky with Chinese stocks, mainly also because of what you're saying, right? Like, how realistic is it? Like, is it too good to be true? And I think for Baba, it's just a real case of, like I said, real like management decisions that have been poor, Chinese decisions that have been poor on the stock, and yeah, I think management also changed quite a lot since the day been holding it. So there's also that there's no real sense of direction.
Mhm.
So yeah, but like I said, no rush for the liquidity yet, and for now, just keeping it there.
Yeah, true, true. But now the question is, what are your, let's say, plans in terms of investing, let's say, for the upcoming time, like, let's say, for the upcoming quarter?
Yeah, so for the upcoming quarter, we'll be just trying to identify those hidden gems, those NNs, American Expresses, and Evercore's businesses that I understand and where it's actually okay to buy still, even though the market is at all-time highs, right? And see how that will progress whenever there might be a potential recession, and see if I can buy more at those lower prices, let's say. So that's for now is the goal, and like I said, just getting out of the ETF game and
Mm.
getting more control into my own hand.
Right, right. But I
And
think
what
it's
about
also,
you?
yeah, yeah. So primarily thinking just to build up the cash, right? And then just when the stock market is gonna cool down a little bit, just jump back on, let's say, some good companies, like for example Visa, right? What we're talking about again, just even expand more on American Express. Evercore is doing great, right, for both of us, and then Group also cannot complain, right? But as well as some bigger guys, like for example Microsoft, for example Google, Amazon. If they're gonna be cheaper, I'm in, I'm in. But they're just too bloody expensive at the moment, right? So, yeah, it's just really about just holding, just sitting tight, for me, and just grabbing as much cash out there as possible, let's say, and just be ready, just just preparing for the show. Yeah. And I also just wanted to quickly come back on this topic where you said that you wanted to move away from the ETFs, right? I think it's
Mm.
also important to let our listeners or viewers know, right? That let's put it like that. Investing in individual stocks requires way more effort, right? But it's also
Mm.
associated with more risks as well as higher reward potential, right? Because having an ETF means that you just, let's say, bet on a way larger basket of stocks, right? So that means the likelihood of you losing more money or gaining more money is rather, balanced out. Whereas
Mm.
if you invest in specific stocks, um, yes, sometimes it works out, right? It can perform above market returns, right? But sometimes you can also have these situations like with Luckin Coffee, like for example with
Exactly.
BlackBerry, and when we had these,
Yeah.
the crazy things with this Wall Street bets, because
Yeah.
both of us also jumped on that and we just had a little bit of fun with it, but
Yeah. Yeah, exactly. It's coming back to what we also talk about during our videos, right? It's the margin of safety that you attribute, and I've been discussing this with Kirill at large, but for my understanding, I am quite young, and there's still a lot of room for me to grow my finances in this scope, right? So decisions that I make now, which are beneficial, are way higher than when I do that when I'm older. And even if I make a wrong bet, for example, on Baba or Luck and Coffee, it doesn't hurt me as much in the long term as it would be the other way around. So, meaning I can take on more risk at this stage in my life than later on. And also because we have this great framework that works really well for us. So our Excel sheet to become, of course, the web app real soon. Yeah, and with everything together, that makes a quite, yeah. For me, it was a not per se easy decision, but it's just a logical decision. The thing that I built together with Kirill and really trust and see the benefits that are coming my way, and it makes sense that I want to do more with that. And I think that's actually quite a good way of saying where would we get the potential web app Kirill?
very good question of yours, right? So, for
Yes.
this reason, again, since we're decommissioning the spreadsheet, for now we just only put, let's say, the reservation for the web app, right? And where you can get it is a very great question, and the answer would be you go to 930.com, then you click on get access today, and we're keeping the same price for now, so nothing changes, only €1. Again, we also don't really want to scam you out of it, because of course there's, let's say, no physical product that we could show you and give you access to at the moment, so that's why it's a pre-order. um, so that's why stay tuned. We're gonna make sure that we're gonna be updating you guys and maybe even showing some sneak peeks in terms of how, let's say, maybe front end looks like already, so that you can also maybe get a bit of a grip on it. And that said, yeah, stay tuned. We're gonna make sure to keep you updated on our portfolios frequently, at least when, let's say, the major movements come in, I guess, from both sides. And then, yeah, just more videos, and I think more educational videos are gonna be coming in soon. So stay tuned, I
Exactly.
guess.
Yeah, and make sure to like and subscribe, and of course, like when you did, dislike when you didn't like it, and yeah, reach us in the comments. We've been receiving quite some in the past weeks, and we really enjoy your interactivity with each other, but also just questions for us, and yeah, just everything in between. So yeah, like, subscribe, and see you guys in the next video.